2022 has been a crazy year for both the real estate and the financial markets. It's also creating some interesting opportunities. Before I get into those opportunities, I just want to say that I believe that the first quarter of 23 is going to produce some amazing deals. That's why I wanted to make this video today. Now, it's not going to be every property on the market, and you do have to do some digging. And honestly, what caused me to dig deeper into this was the fact that Wall Street and super wealthy investors are gearing up to take advantage of certain things in the market. Meanwhile, the general public isn't even aware of what's happening, or they've been scared away from the media. Personally, my family and I own our primary home plus several rental properties, and we're actually looking to add 2 properties right now. In the process of making an offer on one, and we're looking at multiple other opportunities for the first quarter. So I tell you this, I've worked my tail off for the past 20 to 30 years, but nothing has made me more money than real estate. Owning the properties is obviously slow appreciation over time, but paying down the balance and amortization, that'll put equity in your pocket every year. Now on the rentals, the fact that I'm getting positive cash flow each and every month, that's passive. I don't know about you, but I love making money while I sleep. And that has been the great source of wealth and future income, and it's part of my retirement plan. One could argue that it's a pain in the butt to have rental properties. Here's the thing, you can get a property manager to handle this for you. And a lot of problems that people talk about are grossly exaggerated. So it just comes back to real estate being a great source of wealth for myself and many of the wealthy clients that I work with. The fact is, it completely changes people's financial picture. And I just wanted to stress the importance of this before we get into it because so many people overlook it. So the game plan for today's video is we're going to go over some data points real quick. Then we're going to get into how to identify deals in today's market. How do we then structure those deals to really take advantage of them? And then how do we structure the financing? Right now, everybody knows interest rates are higher, but there's ways you can bring the financing down using seller's money. I'll explain how that works and then what the outlook is for financing in the future. So for some of you, today's video might be just good information that you wouldn't have heard otherwise. Some of you may be looking to buy your first home. You want to know how to take advantage of this market. And some of you already own a home and you might be thinking of upgrading to a nicer, bigger house. Or you might be thinking of buying your first rental property. No matter where you're going, this would be really important information for you or someone you know. At any point during this video, if you just want to skip ahead and book a call with myself or the team, you can do so. There's a link in the description below and we'll be happy to go over your specific situation. I just want to give you guys all the data and I'm going to show you some amazing properties that are going to be coming up in the first quarter. Here's the thing, real estate is up huge over the last couple of years, so it's perfectly normal to see a bit of a pullback because nothing can go up in a straight line and it's actually healthy for the market to have these pullbacks. Whenever there's a pullback, you'll see a lot of people jumping on this trend of the market's going to crash just because that's happened once before. Now, this current market is nothing like the market was in 2008. I actually made a video on the specific data points for the current market and why it's nothing like '08, and also why there's a bit of stability beneath this market. Once you review all the data, you'll come to the same conclusion that this is not a crash, but a healthy pullback of prices. What we really want to do is use this short-term event, which is a normal pullback, and see if we can find deals to get even deeper pullback. So really quick, I think it's important that you know that most of the people who are interested in buying a home or need to buy a home, they didn't just go away. They're still there for the most part. It's just that they hit pause because of the uncertainty with the economy. Now, there are some people who lost their job or something major happened financially, but for the most part, those buyers are sidelined. Currently, unemployment is really low. There's a lot of opportunity out there for people to make money. So it isn't like a normal typical recession where you see joblessness, a lot of pain and suffering. It's not that type of environment right now. Basically, what's happened is with home buyers, it used to be a lot of fear of missing out. Now it's changed from fear of missing out to fear of making a mistake. No one wants to make a major mistake when they're making a house decision. So a lot of people are just waiting to see how things play out. Now this sentiment will change and I'll go over a few factors that are going to cause this. I'm going to show you a few key data points about the market because it's going to give us clues as to where the market's headed. And then I'll also get you into the opportunities and what's going to be really important about this. So stick around. As I said earlier, there are major institutional funds that are gearing up to buy more real estate in 23. Blackstone just raised a massive fund for acquiring real estate in 23. And that's going to include single family homes and mini growth markets. Then JP Morgan Chase, they just announced a $1 billion specific fund for acquiring single family homes. Why are they buying? Well, they know that demand is pulled back. So they're going to use this to get better pricing on properties. The main thing they're looking at is supply. There's a shortage of single-family homes in many of the growth markets throughout the country. Builders simply didn't build enough homes over the past decade and currently to fully meet the demand of all the households being formed. So if you zoom out and look over the next several years, it's just going to be a continued shortage of single family. Demand will go up and down a little bit based on the overall economy, but the main thing is there's not going to be a huge amount of supply coming onto the market, which is good for housing prices over the long term. Let's look at interest rates, which are the biggest driver of demand. You saw interest rates spike this year, which caused the demand to pull back, but then you're now seeing them cool off. They move with inflation. They don't move with short-term rate that the Fed moves up and down. They move with inflation. So inflation got out of control. So did the mortgage rates, but now in the past couple months, you've seen it cool off a little bit, which means that the mortgage rates are starting to cool off as well. Now they're still elevated. They're still a lot higher than they were last year, but they're getting to be more reasonable. Now interest rates are something that we definitely need to keep an eye on because this is the single biggest factor that's driving the market today. There's also a big factor that is very important to note. It's a significant group of homeowners who have 30-year fixed mortgages below 4%. Some people below 3%. They locked in ridiculously low interest rates for the life of the loan. That's not going to be much of a rush to give that home up, meaning there's a lot of stability in the homeowners who have these super low rates, and that has never been seen before. This is a new factor specific to this market. It's important because this is just another factor that's going to keep the inventory low. Now we're going to look at some opportunities. The purpose of looking at all that data first was to show you that, hey, yes, there's going to be some great deals out there, but at the same time, got to be realistic. There's also some stability in the market. It's not going to be some crazy crash like '08. The market is completely different this time around. So here is the deal. Wall Street, super rich investors, they're all looking to acquire quality assets at a discount that they can hold for a long term. It's how they get richer. It's what happens every time that there's a pullback in assets. It seems like almost a transfer of wealth from the middle class, from everyday people over to the rich people. It doesn't have to be that way. We can participate in that too. So here's how we find deals in the current market. Most common way to get a good deal is to find a motivated seller. It's a seller who maybe has a life event where they need to sell. They may be in a financial hardship where they need to sell, or there could be some other factor that's driving them to sell within a certain time frame. Now, we want to go look for motivated sellers in conjunction with aged listings. These are properties that were listed too high. They've been in the market for too long. Causes the listing agent and the seller to be more willing to play ball with the negotiations. Another motivational seller is an institutional seller or a builder. Right now on the institutional side, there are companies that acquired a bunch of properties that they now need to flip. Or there could be an individual small company, mom and pop, that acquired some, got in over their head, and they need to get rid of these things. One of the ones that comes to mind is Open Door. They bought a bunch of properties over the last year. In many cases, on these properties, they listed them too high, and now they're willing to play ball on the negotiation side. Let me show you this. It's an entry-level rental property in Phoenix, Arizona. This property is actually pretty nice on the inside. It does need some work on the yard, but it looks like a good quality starter home or a rental property. This thing was listed way too high. It's been sitting on the market and it was in escrow over the summer, but it fell through and now they're cutting the price. They're willing to negotiate on this specific property. I think you can get this one at a great price and also structure a great deal on it. There's many more just like this. Some of them have been remodeled. Some are great opportunities for upgrading, or even maybe look at properties that are just going to make great rentals. On the builder side, there's some builders who are motivated to sell existing inventory and willing to cut really good deals on it and structure really competitive financing. That's another area we can look for as motivated seller opportunities. On the high end, I'm seeing some really significant discounts because these properties are usually listed way too high by listing agents. They sit on the market. I'm seeing properties at the high end that are getting a $500,000 discount from where they were. I saw one the other day that was listed way too high. Now it's being sold $1 full million less than where it started. So you'll see some bigger moves percentage-wise on the high end. How do you find the deals in the market? Well, there's software that we use to really narrow this process down and identify good deals in any market. Now, going through the software takes time and it would be a whole other video, but the team and I are happy to go through this with you one-on-one, digging deeper into specific criteria for your market and your goals. Now, when we do find one of these deals, how do we determine how much to offer? What's the biggest discount we can get? And how do we structure the deal? See, every deal is going to be a little bit different. So we're going to need some analysis on each specific deal to find out what's the sweet spot. What should we make for an offer on this property? We want to make an offer at a discount to what's the current market value. That way it's a good deal. It also gives you a cushion in case prices pull back a little more. It's important to know that most experts are showing over the next year or two are not expected to pull back more than 10%. They've already pulled back 10% and maybe are due for another 5 to 10. So every market is different. And that's where we need to dig deeper. Here's something that's important on every deal. When you're making an offer on a property, you want to ask for credits from the seller. So instead of taking the full amount of the discount and the price of the property, what we do is we ask for some discount, but then we also build in credits. Credits can be used to pay for closing costs, your buy down of your interest rate, so your monthly payment will be lower. And if you go back to what I was talking about with interest rates, they're a bit elevated currently, but when they pull back, you can refinance it. So what we need to get is an opportunity to get through the next couple of years so that our payments aren't too high. One way people do this is called a temporary buy down, where the seller pays for your interest rate and the monthly payment to be lower for the first 1, 2, or 3 years of the loan. It's built into the deal, keeps your monthly payment low for the first couple of years of the loan. It's important because most experts agree that in the next 2 years, you'll have an opportunity to refi at a lower rate. Get you through that period with a reasonable payment. And you could also use the credit from the seller just to buy down the rate permanently. So one of the things we do when you're going to make an offer on property is determine, should we do a permanent buy down or a temporary buy down? How long are you going to keep this loan, and when are we going to be able to potentially refi it? These are all factors that play into how we structure the deal. Now, everybody's situation is going to be a bit different, so we have to tailor this analysis to the individual and how well qualified they are. All other factors that go into it, we can analyze. Another thing you can use credits for is to make repairs or improvements to the property. For example, if you need to replace the carpet, you need to replace the floor, or get new paint. These are things that can be built into the deal because of the current market situation. And when the market flips more to a seller's market, you don't really have those opportunities. But right now, you can definitely do this on most transactions. Another way you can get creative with financing is with seller financing. It's where the seller will finance the deal for you and you can negotiate those terms. There are properties out there where the seller is willing to carry the note, meaning they'll issue you the debt and we can negotiate that debt and the monthly payment. All that stuff's part of your deal. Something that we have to identify where a seller will be willing to do this. Lastly, there's 2 other creative things you can do. You can assume loans, or you can buy the property subject to the current financing. There are certain cases where you could take over the current buyer's loan, and that might be at a really low rate. This is rare, but it can happen. And then there's another case where you might be able to buy the property subject to with a legal contract to make the payments on the existing finance, meaning there's a third party involved. You make the payments to that company, they'll pay the current debt on the property, and you legally own the property. You're basically taking over the payments and the financing, which would typically be at a much lower interest rate, a lower monthly payment. And again, these are deals we can identify in the market on a case-by-case basis, but they're out there. If you have questions on any of this stuff that I'm covering in this video, or you want to look at possibly taking advantage of the market in the first quarter, we've set aside time to do one-on-one consults where we can go deep into your specific scenario. We'll look at the deals in your market, price points you're interested in, and actually run the numbers. Is this a good rental property? Is this a good property for you as a primary home? How much would the payments be? And how much would you be able to afford? All those things have to be done on a case-by-case basis. We're happy to do that for a select number of people. We do spend a lot of time with each individual client these days, so we set aside a certain amount of time to provide each client with a good game plan. If you want to grab one of these spots, there's a link below where you can book a one-on-one strategy call with us, and we're happy to go through that with you. Again, I know for sure there are going to be amazing deals in the first quarter. I'm taking advantage of this personally. I know many people are doing the same. We're happy to go through the numbers with you if it's something that you're interested in exploring more. I hope you found this video helpful. Please let me know if you have any questions. And until then, just want to wish you a very happy new year.